Hey, what's going on, guys? This is Brandon, your trusted realtor, and I'm coming to you, obviously, real estate in action. I needed to make a video, but I had a day full of appointments, so I started out the process in the office where I did an initial recording to talk more about the real estate market, where I'm going to cover new construction and price estimates, really looking at income levels and what you as a buyer in the region can frankly afford. I'm currently here at a property now, so you see that obviously in the background. This is not my home. I'm waiting on a client to come, but in the short term, I want to let you know that this next piece of information as it relates to DC, Maryland, and Virginia is again going to include that full broad range that we talked about all the way to Rappahannock, and I talk a little bit more about that in the next segment and the next piece. But it is also really going to give you more clear information about what new construction and what construction is happening in this area, and quite frankly, that's very little to none. We'll talk more about that data, and really I want to re-emphasize or emphasize to everyone that is taking in this information is that the DC, Maryland, Virginia region is unique, and it's the unique set of market forces and externalities that exist that impact and drive the market environment and also impact your decision making. So in the selling market that we're in now, many people will find that, man, it is difficult to win a deal. And you're realizing how many people in DC secretly have lots of money stored up under their mattress. But even if that's the case, and even as that being the case, there's tons of opportunity if you plan smartly and strategically. And so I want to start with the basis of making sure you have the information this first part of the quarter, so that way as you plan to make that move to buy a home or to sell a home, you know realistically what the DC, Maryland, Virginia market is doing. Let's dive into it.
All right, folks, so we're going to be looking now at new construction data and also talking a little bit about long-term projections about costs in the region. Now, remember, we're talking about DC, Maryland, and Virginia, and we're talking about a much larger scope. We're talking about Rappahannock, we're talking about Fauquier, we're talking about a lot of different places that are here in this metropolitan region. And you can see that overall, in this overall area, that new construction, especially new construction permits, is what this data looks at, and that those permits are down. So they're actually negative, almost 7% here in the region compared to everywhere else in the country. New construction is about 8% of is about the current average for construction that is going on across the country. And we can see even in the chart below, the line graph shows us that the average that DC permits or permits in this DC, Maryland, Virginia region are actually significantly low what they have been traditionally and historically. What that means is that our market is very reflective and is made of pre-existing properties. That means that there are going to be a host of investors in the ecosystem that are going to be buying up homes and doing renovations on them. So unlike other places in the United States where there's plenty of land to create new developments, that also becomes one of the clear limiting factors here in the region. Is the lack of available land and space, and also the cost to do the renovation needed, or should I say the work needed, and also go through, especially if you're working with a government entity, and I have to dealing with a land disposition agreement, or a community benefit agreement. All of these are things can impact the bottom line of developers. And so whether they're bigger developers or small developers, you find that you need space, and that space, especially in DC, comes at a premium. All right, so let's talk a little bit more about price projection. All right, so I know I mentioned I talked about price projections, but that's not exactly true what we're going to be talking about here. We're going to be talking about the nuance of price projections and really talking about an affordability scale. What I find really interesting about this data, and this data goes back through July 2020, so we're still waiting for the National Association of Realtors to update this with additional updated data through the summer market. But what I find highly intriguing is what we're seeing here. The data to our left shows the broader DC, Maryland, Virginia, and West Virginia region and the affordability scale or index. This basically shows that based on how much money you make is an indication of the percent or how much housing you can afford in a particular region. And then that is also broken down on your right to DC specifically. So let's say for individuals who make let's say if you're in a place where you make $100,000. In this case, it looks like you can afford about 35% or 37% of the inventory that currently exists. That means that you're competing with everyone who's in that price point, and that really kind of gives you a sense of the availability. So when you begin to govern yourself, and if we can be real for a moment, this also goes to first-time home buyers who are thinking, hey, I want to have everything as it relates. So I want to have all of these additional accoutrements to my property. But the realization is, this is what the market shows you, is that, this is affordability. And when we're in a seller's market, it's that much tighter in order for buyers to get 100% of everything they want. But again, remember my previous videos that people who buy in the district typically see appreciation and appreciation for their homes grow. There's not been significant impact or historical trends where DC has seen depreciation on home values, unless you get outside of the Beltway. And you all know during the Great Depression, you have those mansions or mega mansions that were in Bowie that were selling for $500,000 that ended up being evaluated or appraised for closer to $300,000, and those individuals found themselves underwater. But let's say you make $125,000 and you're in the metropolitan region. You can afford 50% of the overall inventory, while if you make that same $125,000 in DC proper, that in the District of Columbia proper reduces you to 37, nearly 38% of the overall current available inventory, or based on those sales. You would, in order to be able to have your pick of the litter in Washington, D.C., to almost have more than 90% or higher than 90% of the properties that are available to you, you have to be in the monthly or the annual income bracket of $500,000. And it's so important to be able and to begin to contextualize the D.C. market and what that means here. So it is not unreasonable or astronomical for people to come into this area and to be gobsmacked when they see what home prices go for. But it does mean that you have to not only temper your expectations, but you also have to be willing to see the opportunity to invest long term for yourself.